Hey everybody, Brian here from quantlabs.net. Today I'm going to talk about market sectors. I've got a little matrix which is available for all my members, Excel spreadsheet. And basically what it includes are all the different major sectors and categories of the US markets. I've divided them up into defensive versus cyclical and where they can be impacted by the different government sources, be it European or American. So we've got here S for retail, S for service, R for retail, consumer, durable manufacturing, and non-durable. For those that don't know what cyclical versus defensive means, is that in a bear market, you're going to be wanting to focus on defensive sectors, while in a bull market, you want to focus on cyclical. So when you look at the totals here, you're probably looking at, I don't know, 200 plus, let's say. So we have here in all the major regions here. Now, I could be wrong in some of these, but generally, if you have utilities, they're all going to be defensive, focusing on non-durable. Another sector is technology. Here, they can be impacted mostly by cyclical. There's the odd one where I'll talk about this, where healthcare would be a defensive. Mind you, a lot of these fall under non-durable, durable, services, and that sort of thing. And when you move into things like um, services, generally, we have quite a defensive, cyclical a lot, some defensive, as well as you could see that we have some services, retail, um, and consumer, and I did say services. So that's pretty well what we're looking at there. Then we move into healthcare, which is mostly defensive, some cyclical, and of course we have impacted by services, non-durable, durable, and again that's durable and non-durable manufacturing. And then we move into did technology. We will move into services. I think we just talked about that. And then we have industrial goods. Man, hang on here. Okay, industrial goods. So that's going to be mostly cyclical, but some defensive. So, for instance, if you have military, that's usually good for defensive. Uh, and then, of course, we have durable, non-durable, and some healthcare. And then during another bear market, a good one is healthcare, where there's a lot of defensive, some cyclical, some are services, non-durable, services, and one durable. Then we get into the financials. Here we get quite a bit of defensive, and that's regarding maybe real estate, um, or REITs as they call them. Some cyclical, and a lot of services, healthcare, and so on and so forth. And then we get into consumer goods. I'd say a lot of these are going to be cyclical, but the odd one will be defensive. A good one, example of why that would be, tobacco is a good one. Personal products, dairy. These are less affected by the consumer when the bear markets hit because of higher unemployment, I guess. Consumers, we got consumer, defensive, healthcare. Defensive, consumer sectors, as well as. Oh, let me repeat that again. Sorry, durable. What's C again? That's consumer. Yeah. So that's basically what's going to be in the consumer goods. I think we got one more basic material or conglomerate. usually do well in defensive, manufacturing, and then of course we get into basic materials where there's a mix between defensive and mostly it looks like cyclical and mostly non-durable. Okay, so again, this is available for all my members. If you're interested, please check this out. This does have a huge impact on my Python scripts. This one will be a big impact on my next Python script. So if you are trying to figure out where to go, just come under my Python attack. Let me just pull up my browser here. If you go under YouTube Quant Labs, come under the playlist, you will find this one right here. Some of the ones that I'm referring to in terms of this one right here is the one that will be really talked about. With demo of working Python script to identify stock pair for arbitrage. This spreadsheet here will impact this as I am able to now scan sectors with this in my Python script and in my Mongo database. Hopefully it'll help you out, and I'll talk to you later.